Swing Alpha Trade Report for May 2nd, 2017. First, we'll go over the indexes. SPY had another inside day. It's still in consolidation. Nothing significant there. The Qs, for example, Facebook, Netflix, Amazon, Google, Tesla, they've been extremely bullish. We had this gap right here that did not fill, so it shows that this bullish trend has significant legs to it. First, we'll go over trades that we stopped out today. ACAD, we had entered this trade yesterday because it broke out on a bullish flag, but today we had a very strong bear candle, so members were told to exit and took a small, little less than 5% loss. We could expect it to consolidate over the next 1 or 2 weeks, and we'll watch it, possibly considering getting back in. Next trade we stopped out was AAOI, which we also entered yesterday. The video yesterday, I emphasized that it was a 50-50 chance trade. The breakout had failed, so we got a very large bear candle, so we stopped out. Members were notified to exit trades and took a small 7% loss. If it did work out, we would have expected about a 22% profit gain, so it was worth the try. First trade that we entered today was kites in a pennant pattern. Pennants are rather rare patterns. I only see them maybe once a month. There's a rising uptrend, so you could get in and ride the trend. Earnings will be in a few days, so you could also wait for earnings if you want. Next trade we got in was Hawaiian Holdings, HA. HA had been in an uptrend for about a year and a half, but for the last few months it had pulled back. The pullback had broken out, but we missed the entry, so we waited for a consolidation. Today the consolidation broke out. We alerted members to get in about 54.5 today, so you'd be up about 2% in one day. It is possible that it could pull back to 54.5-ish tomorrow, which would be a definite opportunity to buy in and ride up. Next trade is Target. Target is retail. Retail has not been doing so well, probably because of online retailers slowly taking over. 2 months ago, Target had a very bad earnings, very large volume spike, but we have what looks like to be a basing pattern. We have possible double bottom here, one in March, one in April, and now we're in a rising uptrend. So you could buy now and ride this uptrend. I would expect it to go back to the gap, maybe to around 60, and we could expect in the coming months to possibly fill that gap. The last trade is CLVS, which is biotech. Given how bullish the market's been in the last few weeks, it's been very difficult to find bearish stocks to use as a hedge to our long stocks. But CLVS been in a rising trend, but the rising trend failed a little more than a month ago and is consolidated below support of about 60 and is now in what looks like to be a bear flag consolidation and possibly about to break out of the consolidation. So you could get in now and short it, or you could wait until it goes to about 60 and then fails to break out and appears to go back down. Then you could short it as well. I would expect it to go down to maybe 46, 47, or maybe even optimistically 40. So if this doesn't work, it appears to be about a 50-50 chance that it will work out. If it doesn't work, you may lose about 10%. If it does work, you'll make about 30% profit on this trade.